Hello, welcome back. Happy Monday. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. Thanks for coming back to my channel if you are not new here. If you are, thanks for finding me. Make sure you subscribe while you're here. You can find me every Monday on this channel giving an update on what's going on in the Phoenix real estate market. I also post videos about Phoenix real estate on Fridays as well, so make sure you subscribe so you don't miss any of that. And if this information is helpful for you, hit the like button and the bell so you can be notified for the future. Before I jump in, I just want to say thank you to the Cromford Report. I am a subscriber and they provide such awesome information for their realtor subscribers to use to share with their clients. So that's a lot of the information that I'll be sharing with you guys today, in addition to just other things going on in the market and info that I've been seeking out. So let's get started. I want to start a little more broad this week. Let's talk about what's going on a national scale, and the hot topic of the week has been interest rates, right? So last Wednesday, the Fed increased the federal funds rate by 50 basis points, which thereby affects interest rates of all kinds, including mortgage rates. And so we saw this coming. This isn't new news. The Fed has announced that they're taking some aggressive measures against inflation. So not surprising, but it is certainly going to affect the housing market and, kind of already has. So this is the most aggressive increase in a month that they've done since the year 2000. And interest rates over the last 15 weeks, when we talk about mortgage interest rates, have increased from about 3% to 5%. So here we go on my little whiteboard here. I've got all this information. 3% to 5% over the last 15 weeks. That's a huge increase. That's a really big difference in affordability for home buyers. And just for some perspective, I have some other numbers here. So back in December of 2021, not that long ago, the average mortgage interest rate for a 30-year fixed rate loan was about 3.11%. And now, as of May, we're sitting at about 5.27%. And that's the highest mortgage interest rate we've seen since the year 2009. So we're definitely moving into new territory as far as this market goes. We've been in this really strong, competitive, frenzied seller's market for a long time throughout the country, but especially here in Phoenix. And now these rate hikes are really changing affordability and also just demand in general for buyers. They're kind of deciding whether or not they want to spend that much extra money on their payment. And here's how it breaks down. So if you bought a house for $500,000 with a mortgage interest rate of 3.11%, like it was back in December, your monthly payment is about $21.38. But if we add in a new mortgage interest rate at that 5.27%, you're sitting at about $27.67 per month instead of $21.38 per month. That's a difference of $629 a month additional for the same house. And that doesn't even include that price increases and appreciation have happened since December. So when we talk about affordability, this is a really good example, in my opinion, of how this has changed significantly for buyers just in the last 5 months. So that brings us to, let's talk about affordability. One of the best ways to measure this is the payment to income ratio, which basically looks at how much of someone's median income they have to set aside in order to make their mortgage payment every month. And back in 07 to 09, when we were in the recession, this this ratio hit 34.1%, which I believe was a record. And where we're sitting as of April is 32.5%. So we're closing in on that record right now, which really isn't surprising when you look at what we just talked about over here with interest rates changing that monthly payment quite significantly. So mortgage rates, they're saying if they go up 0.5% or home prices continue to go up another 5%, we're going to see the worst levels on record for affordability. So we're gonna blow by this 34% here. And again, this is national, so the same thing is happening in Phoenix, but this information is not drilled down specifically to Phoenix, but it's happening everywhere, right? We're seeing mortgage rate increases because of the feds raising the interest rate, and that's going to continue. And most other markets are appreciating, maybe not as much as Phoenix, but definitely seeing the seller's market that we've been feeling here. So let's drill down to Phoenix, moving on to the Cromford Market Index. And if you're new here, I'm going to give you a quick explanation. So the Cromford report has created an index that measures supply and demand factors in our market. And essentially, if this number is anywhere between 90 to 110, we're in a balanced market. But anything above 110 is a seller's market, and anything below 90 is a buyer's market. As long as that number is above 110, we know for sure that prices will continue to increase. Over the last 20 years, they've measured this, and anytime that index is above 110, we're continuing to see price appreciation. If it's below 90, however, that's a different story. So we're at 366 this week, well above 110. But here's the deal. Last week when I reported on this, I think we were at 381. And the week before that, we hadn't gone below 400. And if you've been following my channel for a while, the CMI has made some changes, but for the most part, it kind of hovers around the same number within maybe a few points. For the last year, I've come on here and it's kind of been like, okay, no new news to share with you guys. We're still in the same spot. So knowing that we've dropped this much, 40 some points in the last couple weeks, really, that's a huge change. And so what they've talked about is that the average change is, and I have this on the next page, so I'll get there in a second, but the average change is about 18% over the last month, and before that we were seeing 15%, and I'm talking decrease in terms of change in the CMI throughout the valley. So we're really moving downward at a quick pace, much quicker than we even saw last summer. Now, the big thing that's happening here is our demand is going down and our supply is going up. And I talk about this every week, but it's important because those are the two things that really needed to move in opposite directions to start bringing us back to balance. And so, well, they're not technically moving in opposite directions, they're moving towards each other, right? So demand is coming down and supply is coming up, so they'll be meeting each other. And so as we continue to see this, that is going to drive this CMI further down. The closer that supply and demand get to one another. Now, in the past, we were having such issues with supply that even as demand changed, we didn't see this CMI number change all that much because supply was just staying so incredibly low. But supply's been making some pretty bold moves upward recently, which is catching my eye and definitely something we need to watch because that's what's kept us in a seller's market. And once we start to have enough supply for the buyers or oversupply, if we ever get there, that's when you may start to see in an oversupply situation, that's when prices will start to go down. And that's not what we want. So the last thing that I read this week on the Cromford report is that active listings have increased 27% in the last 4 weeks. And the last time we saw an increase of that much was back in April of 2005 before the market crash. Scary, right? That sounds really, really scary, but let me explain. The percentage is high because the numbers that we're working with are so small. So our number of listings on the market is still incredibly low compared to what we should have in a normal market. We're in the 10,000 range and we should have like 20,000. So we're still in a place of low supply for sure. But when you start to see an influx of a steady influx of, a good chunk of new supply, that percentage is going to be pretty high. But it doesn't mean it's not something to watch, right? Just because it's not significant when you look at the numbers, we got to make sure that if this is a trend that we're going to start to see, it will for sure start to change the market. Now, new supplies come up in a few different places. Under 400,000, supply is up 1%. Between 400 and 500,000, new supply is up 28%. Wanted to break down all these price ranges for you guys. 500 to 600, it's up 50%. So this is all really good news for buyers. In the 500 to 600,000 range, you have like double your choices all of a sudden. So that's nice. 600 to 800 is up 41%. 800 to a million, up 38%. 1 million to 1.5, 36%. And the big gains that we saw are here in the 1.5 to 2 million and 2 to 3 million. Both of those up 86% and 68%. Over 3 million, only up 9%. So it's good news for buyers because we have more supply. So let's move on over to looking at the CMI for every city. And I want to show you guys what's going on in all of your cities. You can see some changes are much more significant than others. A couple that are not changing all that much. We have Glendale and we also have Goodyear. Both of these cities haven't changed all that much over the last month. They're definitely the lowest, but then we have some that are leading the pack. Like we've got Buckeye, we have Queen Creek and Paradise Valley, as well as Cave Creek, and also throw Gilbert in there. That's a little bit higher. All of those cities have seen much more significant change in their CMI going down over the last month. So I mentioned this on the last page when we were talking about the CMI. The average change of all of these cities over the last month is 18.1% downwards. And previous, we were sitting at 15.3% month over month. And I think the month before that, when I reported on this, we were saying about 12%. So clearly the pace and rate of the CMI moving downward has been increasing. So take a look at your city, give it some thought. If you're thinking about selling, now might be a good time. I can't predict what's going to happen in the future. No one really can. But we are definitely seeing a market shift to where prices will continue to rise. But if we get into that balanced market, we're not going to see such price increases as we've seen before. We're already starting to see fewer offers on homes, so the competition has dropped off a bit, largely because that demand has gone down pretty significantly. So if you're thinking about selling, definitely consider it if it makes sense for you. Check the description below. I have a link to check out your instant home valuation, so that might give you a good idea. And then I can also put together a CMA for you if you'd like more detailed information. Now, if you're thinking about buying, you might be coming into a good time as far as less buyer competition. Now, rates are definitely higher, and I went over all of that affordability. That part is not great as compared to a year or 2 years ago. However, you may not be in an insane bidding war where you have to waive your appraisal and that kind of thing. So that's a win in some ways, that you can just maybe have a little bit more of a normal process in buying a house. So check out the link below. You can search my MLS for homes for sale in the Phoenix area. So if that's helpful for you, make sure you check it out. I also want to hear from you guys. So comment below if you are buying or selling a house right now. What's your experience? I want to know, are you up against multiple offers? As a seller, are you seeing multiple offers and getting a post-possession out of these buyers? What's going on in your experience? Share that below in the comments. I'd love to hear from you. So that's all I've got this week, you guys. Thanks so much for coming back and watching this video. Don't forget to subscribe, and I will be back next week with another Monday market update. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.